Hey traders, welcome to another Monday weekly breakdown. Starting with the S&P, you can see that price action has been pretty wild over the last few days. It's been very difficult to judge exactly what we're seeing here. Kind of leaning towards potentially one of two scenarios. Either we're looking at just some kind of wild expanding flat in here somewhere, or we're actually looking at a bit of an expanding triangle, something along the lines of this. But even in that scenario, having the structure where it is doesn't really make sense, given that we just came out of a fairly decent little corrective structure in here. If you look at the 8-hour, you can see the only crossover we've had since the rally from November is this one here. So really all we have is all of this as one big wave and something to come following that. Obviously, if we go into lower time frames, we can see different crossovers, and that's why I lean towards a little bit of an expanding triangle in there, because we have the 1, 2, 3 with ever expanding waves, and it kind of fits into this scenario. Also possible that what we're actually looking at is that as your expanding triangle. So it's a 1, 2, 3 down, 1 up, 1, 2, 3 down, 1, 2, 3 up, and get a little one down. And then all of this is actually just your impulse. A, B, C, D, E, get one little dip down towards probably what I'm seeing in the markets around about 3,750, maybe 3,8, somewhere in this region. Then again, it's all very speculative as to what we're seeing. All we have is a whole bunch of very choppy, very impulsive looking waves, which makes me believe, because of the impulsivity of the waves, we are looking at an expanding triangle of some kind, which is very difficult to judge exactly what we're looking at given the price action around it. So very challenging conditions, but it goes to show the kind of lack of certainty we have in the markets at the moment. As you can see, if we draw in this little trend line at the top, we're approaching an area of potential risk off with another dip to come. And I'm seeing that in some of the other markets as well. Some of the currency markets are showing a little bit of dollar strength to come over the next few days, meaning we may just get that little dip. So very challenging conditions at the moment. And you really just have to sit on your hands and wait for those perfect setups before you really commit to anything. Same thing with the Dow Jones. Nothing really makes sense in the context of the price action right now. As you can see, we have a little corrective structure. We have a push up, and then we have a big dip, and then a big up move from there, with only one real crossover on the 4-hour, never mind the 8-hour. So on the 4-hour, technically speaking, all of this is one big impulse. But then this following move, the move following the move down, is just another impulse up. So it's very, very challenging price action to be looking at the moment and making any sense of. So it's really just about being patient, seeing what we find, and seeing if we can analyze or see if we can identify trading opportunities within this chaos. The Russell just continues to remains extremely overbought in my view. As you can see, we're sitting way beyond the structure that's provided to us, and impulsing higher. So even if you are looking for long trades, very, very difficult to find long trades in this. You have to manage your stop quite closely, because any moment could involve a deeper pullback. And there's no real way of analyzing where you're going to put your risk. I mean, to really look at this and think what you had here was a running flat just doesn't make sense to me when you look at the B wave structure. It's just very, very difficult price action at the moment within these indexes, although within the individual shares, we have better opportunities. So starting with Facebook, you can see how we are still sitting within our little corrective area, potentially looking for another move to the downside. are still looking at this from a bearish point of view. If we go all the way out to the lower time frames, you can see how I still think we have what looks like the start of a deeper pullback on its way. And when we look at the structure on the lower time frames, you can see how that's played out pretty well so far. We had that impulse off the lows, off the highs, excuse me. We had a choppy wave up, choppy wave down, and then a big impulse. I'm ready to call that an ABC. And now we're just looking for correction to move to the downside. Although it's taking its time, I still think that is what we're looking at. There is a possibility that we need to take recognition of that all of this is actually more of a triangle than anything else. You have an impulse down, a 1, 2, 3 up, 1, 2, 3 down, a bit more complex though. You have a push up and a push down. So perhaps what we're looking at and needs to be considered is an A, B, C, D, E triangle. And if that is the case, if we take a look at the length of the correction, it hasn't done enough to be part of that impulse preceding it. So if that is, then we're probably only looking at that as your impulse if we're going to break higher from here, which means a 350 target upside. So yeah, again, very challenging conditions. I'm still leaning towards downside. If we look at the dollar's still kind of in uncertain area, but still leaning towards dollar strength. I think we still need a decent pullback in some of these markets, given how far we've come without much of a corrective price action, and how we have this bigger structure that's pointing towards a bigger corrective structure, a bigger correction to come. So yeah, let's just see how things play out. But again, just about being patient, looking for the right opportunities, and then getting into those trades, but being patient to wait for the right setups. Another one is Apple. As you can see, Apple again lining up for bearish price action. Very clean structure on the 4-hour time frame. You have an impulse down, nice little ABC up, nice corrective structure within that B wave. We have a topping out. We have a strong impulse off the highs, and now we're looking to trade this to the downside. So potentially what we're seeing here is just a little bit of a zigzag correction, impulse, correction, impulse, before we see continuation to the downside. Just keep in mind that all of this drop is coming from, or the second drop, or the C wave, looks like it's going to be very choppy on all of these price charts, because the first A wave looks very, very quick. If you look at the Facebook, we zoom all the way out, trading this as a larger degree structure, you see how this first wave is very, very quick and impulsive. So we can expect the choppiness that we're getting. Just makes it very tricky to trade, but it doesn't change the higher time frame structures, and we need to keep that in mind. Amazon is another one that's been really, really messy, but starting to show its hand just a little. We can see there's a little bit of structure within this, and it's pointing towards further downside. Again, when you look at this as a potential triangle, it is a possibility, but at the same time, we're seeing some very choppy price action within the middle of these waves, which makes me believe it's actually not a triangle. It's more of a expanding or more of a complex flat pattern. So we're keeping an eye on this. Nothing really tradable right now, in my view. I'd like to see a move down to these lows. There's potentially a short-term long from these lows, but I'm more interested in the long trade or in the short trade from this region if this plays out as we think. Microsoft, nothing in it for me yet. I still think downside, but we need to see that price action that gives us an opportunity to get into the trade. There's no use getting into this short trade here, just going in blind, not knowing where this is going to top out. You want to wait for the turn, wait for something that says we are heading lower from here. Netflix, similar scenario, although we may be getting a little bit of that choppy corrective price action that we're looking for. Very similar to Apple at the moment, where we've had a bit of price action. Maybe you're looking at a zigzag. It's got the right structure to be a zigzag. As you can see, impulse, ABC, impulse. But let's see how this develops. I don't think there's much of an opportunity to get in just yet. So you just really have to be patient. Google, another one. We did say we could see this pop up to around about 2,200 before we see a turn. Given the structure of the impulse ABC, impulse up, the structure on both indicates we have a little bit more upside. But we're sitting right near those levels where we want to start looking for the turn. As you can see, a lot of convergence in the Fibonacci sequence numbers of these structures on both timeframes. So, and again, we have this big move to the downside. We can expect another big move down. We just expect it to be quite choppy. So again, it's another chart pointing towards downside, but we're just waiting for that turn. AMD looks like it may have turned already, just giving us quite a bit of a choppy price action to be trading at the moment. As you can see, what we really have is a big impulse off the highs, which is great. We have a nice corrective impulse. Then we go straight into another impulse down and an impulse up. So maybe we're looking at a running triangle, or maybe this gets a little bit more complex over time. But again, as you can see, fairly decent and quick A waves to the downside. Although I think this is more of a topping pattern for a bigger move down rather than just a small push to make this your C wave. But again, even if it's not, we're still looking at a good 20% downside from the highs down towards 71, 75, somewhere in that region. So just see how price action develops within this. Yeah, very challenging trading at the moment in the US equities. Boeing, we were looking for an expanding triangle, and it seems like that's maybe what we've got in here, given how we're starting to see quite a big dip off the highs of this market. The MACD says everything's lined up for this to be an ABCDE, and we started to get that downside, like I said. So anything that looks like a flag, or if you want to be more patient, waiting for a lower degree corrective price action or price structure, that to me is a good trade to the downside. Still good downside target, as you can see, because now what we're trading is all of this as your impulse, A, B, C, D, E, and then you get to push off these highs down towards a target of around about 171 at the very least. Higher time frame says potentially even more than that, as we look at this as the potential structure that goes down towards the lows at 88. But yeah, again, it's very, very tricky price action for Boeing because there's no real structure that we can clarify in here without much speculation. Alibaba kind of still chopping sideways, giving us that expanding triangle type of pattern, A, B, C, D, E. I don't think this cross down is enough to call an E wave. If you do want to get risky and trade this, I would wait till these highs to be broken. But I would really prefer to see a little bit more downside if we are going to get long and use this as one of our kind of hedge trades against our short pieces. Bank of America, big impulse down, and we're looking for corrective price action, but all we've gotten so far is a strong impulse up. Still expecting a little bit more downside and this to get corrective, given how strong this impulse was off the highs. At least get some form of structure in this, rather than just a big impulse down and then continuation to the upside. So we'll have to just be patient. Again, patience is the name of the game at the moment. And let's see how things develop. I don't really see any other price structure in here that makes sense in terms of a big impulse up, impulse down, something that's going to get corrective that indicates more downside. But yeah, the market's really strange at the moment. If this just continues impulse into the upside, I wouldn't be surprised. But you would have to find some structure within this at a later stage. Berkshire Hathaway went on to break the highs again, but again, still forming this rising wedge. This is still looking good for at least a topping structure. And as you can see, when we look at the higher time frames, it makes a lot of sense that we have this as a structure, and we're in a kind of rising wedge that could fall to the downside quite strongly once we get going. It's just taking its time. A lot of these charts are all pointing towards downside. They're just taking their time to show their hand, and that's why I'm saying patience is really key here. But you can see how clean this little rising triangle is starting to point. We did have this as a rising triangle, ascending triangle at some point, but now the higher time frames are showing this as a triangle, which just makes it a little bit more clear and gives us more clarity. The higher the time frame, the more clear the price action. So although it did mess us around in the early stages, there were no trades, so we never lost any money, and the higher time frames are now showing the same rising triangle, which is really good for forecasting purposes. So looking really good. If you do want to get risky, I think there's a decent little opportunity to trade this, just flat out get into this trade where it is. as a rising triangle. It's a very risky trade because you don't know how high this is going to go. We're not waiting for the turn. We're just getting in with the hopes that we're topping out at this little trend line. But it can really work out for you. So maybe just a lower risk position might play out as this little triple top / ascending triangle. And if you do just get legs to the downside from here, it'll work out really well. Just keep in mind that you might get downside and you might get another test of the high as this triangle converges again. So you want to move this to break even fairly early on. Just be wary if you are going to take that risky trade. Beyond Meat continues to chop down. We still have this little flag pattern for potential trade to the downside. I still think it's a good trade given the higher time frame structure and what we've seen. Would have preferred a little bit more upside, but I think it's done enough, got into the right levels, and definitely is tradable. Just want to see, you can see how tradable this is. All the structures are pointing towards downside, and we've seen quite a strong move. So this little flag, especially with how long it's taken to play out, and you can see how it's starting to get into the ballpark of this being an impulse. You can really see how this could potentially break to the downside quite nicely. So I like this as a short trade. Citigroup, we're playing this as a little bit of an expanding triangle. It's kind of breaking out of that now. As you can see, the MACD crossover here is much bigger compared to this. So I'm more inclined to look at this as a earlier structure on the lower time frame, something along those lines. And now we're going into correction. We just need to wait and see if we're going to start chopping down towards the lows this week. That's ideal for me. I don't see how we turn around and go back to the strong to the upside here, given how strongly we've pulled back, unless we start to chop back up to the highs and we get into a little bit of a corrective structure in here, which again means we're going to be in this correction until basically end of March, early April. So even to be in these market conditions until end of March, early April, just doesn't gel well with me. So I'm more inclined to think we have turned, we're going to go into correction here, and then we get more downside. Camco went to go break the highs. So again, we're just waiting for an impulse and corrective price action. As you can see, the lower time frames giving us a little bit of a push higher here. So maybe we're starting to see this corrective price action at the moment. Let's see how things play out on the lower time frames. But yeah, still looking pretty good for downside if you ask me. There's again a possibility that this is an A, B, C, D, E expanding triangle to push to the upside. If you do want to trade long, it is a little bit tricky. The risky trade is to trade that as a flag. The lesser risk trade is to have an entry order above those highs. And I think that's not such a bad trade, just to keep your basically hedging your bets here, because we have pretty big structure in this. If we have a big impulse off the lows, you can see how this little corrective structure has done enough to be considered an expanding triangle of that caliber, which means our upside target of this move is potentially as high as 1860. So that's a nice little trade to the upside if you are looking, again, another nice hedge to trade the opposite viewpoint of the potential bearish market that I'm seeing. So that as a potential expanding looks pretty good to me, and worth looking at in my view. It just helps us, sorry to go back to this, just helps us in case we have a little bit of, say, confirmation bias, continuously looking for the short. As soon as you can identify a long trade, it's worth putting on at least the entry order, just to kind of go against yourself, your own bets. If the price action says upside, then it's worth looking at in my view. So I think an entry order above these highs will definitely do well. CMG, Chipotle, another rising wedge. Initially, we were looking at one here that broke to the upside, but nothing to say. This is actually starting to look like a rising wedge on a higher time frame. As you can see, if you want to look at this as a little internal structure, you have everything playing out pretty nicely for some downside at least. So I like that as a short trade. Again, maybe a bit optimistic or a bit confirmation bias to the bearish side. But you can see how This MACD is dying off. You're seeing that rising wedge pattern. You've seen a strong move up without any decent pullbacks. So to me, the short bias definitely has its place. DraftKings went to go break the highs just as we thought. So we're sitting right at that level that we're looking for a turn in the markets. Maybe a little bit more upside towards 68, but definitely no looking at a long trade here, in my view. You're right at those levels where you want to be cautious about taking profits or at least choking up your stop loss on the trade we had from this 51 region. And you're really starting to look for a potential bigger turn to the downside here, in my view, given what the rest of the market's doing. MACD divergence, as you can see, double top with that divergence, always signs that we need to just be cautious of downside. No trades just yet, just be cautious where we're sitting there. Disney is another one. We were looking for this to have turned already, looking for corrective price action to the downside. We said taking this as a little flag would work, but it didn't break. So again, just being patient with the trade saved us a loss. We're now sitting very close to these highs. Very unusual if we don't break these highs, but again, there's no trade. We're waiting for a pullback, a correction, and downside. Higher time frame still solid, still looking good for a bigger move to the downside, in my view. So that cautious outlook remains. EA Sports, same thing, big strong move off the highs. Now we are waiting for the corrective price action that it looks like we're getting now. We've had a nice push up, drop down, push up. So maybe it's going to be something confusing like an expanding triangle that we've seen so many of at the moment. But you can see how this is a big move down and we're going into correction for more upside, especially when you go to the zoomed out target time frame. You can see how downside is on the cards and big downside at that. So this is another one you want to keep a close eye on, looking for entry possibilities. Forward, we thought we may have had the start of the move down. We're looking for corrective price action. It's still on the cards, but we've corrected quite a long way up. I'd like to see the start to chop down now. At least give us an indication that we're going down. But right now, we have an impulse up and an impulse down and an impulse up. So nothing clear just yet. We need to be patient with that. FireEye is one that's a bit more clear, much better price action. We were looking for this to pop higher and then fade this little push. So in terms of levels, we haven't got to our minimum levels just yet. So we can expect a little bit more upside on this. Kind of 22 is our minimum, 23, 23, or 23, 28 is our maximum on this to trade to the downside. So keeping an eye on this to fade away and give us a really nice short entry to the downside. Higher time frame on this one is also looking really good. GDX, looking at this to get more choppy and corrective, which is exactly what we've got in here. We've got a little bit of a potential expanding triangle. As we said, there's all over the place, but it just goes to show you how much uncertainty is in the market. When you see expanding triangles everywhere, it means the market is uncertain. So we have this impulse down, A, B, C, D, E. We'll probably get another push lower from here, and then a push back up to give you a nice running flat corrective structure of the previous impulse. So that's your previous impulse, A, B, C, and then a continuation to the downside from there. So a little bit early for that. No trade just yet. I wouldn't want to trade this little end of the B wave. It's just a bit too messy in there. We'll wait for this to clarify itself. It's very speculative to trade that to the downside. But if we see this move down and then a push back up, that makes way more sense. And there's also a break and retest of a neckline that we have for potential head and shoulders on the higher time frames from a classic charting point of view. So this push down and then push up would be a break and retest of this neckline, which is always good confirmation of the trade. Goldman Sachs, another one we were looking to get corrective, but it just impulse to the upside. I still think this is going to get corrective. We just need to give it time to play out. Looking really good for downside, still just need to be patient. iShares, biotech, another one that we thought was going to start to move down, but went to go break the highs again. So we're just repeating the process, waiting for a move down, waiting for entry setups, short trade setups. But for now, nothing. If you take a look at this, it's starting to look like a little bit of an ascending triangle as well, ascending wedge for downside. So it's another one that's looking good. Doesn't have the MACD divergence on the 4-hour like some of the others, but that kind of indicates that structure indicates we are approaching some highs, especially when you look at the higher time frames. You can see how we're waiting for this bigger move down and the lower time frame structure, which you can see in something like the 4-hour. We are very close to those highs of this structure. We're sitting on the 0.786 now, so we're right in that ballpark for a decent pullback to come, if not a major pullback of the higher time frames. IBM, another one, we were looking for correction, and we started to see some corrective price action in there, but nothing too much on the cards. We have to wait and see how this correction plays out. Intel, another one, impulse down, waiting for corrective price action. Johnson & Johnson, impulse down, waiting for corrective price action. JP Morgan, impulse down, waiting for corrective price action. If we break the highs, we just move it down and we continue with this process. Live Nation, another one, looked like we were getting it, but heading back towards the highs, potentially still waiting for this to play out. Triple M is another one. I think entry order below these lows is still viable. Just check the 1 hour. Not too bad. If there's a little bit more upside, I would take this entry order off because we're starting to drift into this becoming its own corrective price action rather than a lower degree expanding triangle. So just patiently waiting for this to play out, but I think an entry order below these lows is pretty good. Morgan Stanley, another one, waiting for the turn. MicroStrategy, another one that on the higher time frames looks good for a turn to the downside. It's just got a lot of upside momentum given the fervor or the fever behind Bitcoin at the moment. So you just have to wait. But if you look at the higher time frames, you can see the structure is very much in a place that it's ready to come down. Well beyond it actually. So yeah, and you can see very parabolic move. We've gone from 93 up to 806, which is very parabolic. So just be cautious of this one. Take away the log chart on the weekly, you can see how parabolic it is. So just be cautious trying to get long something at these levels with any conviction. If you do want to look for those long trades, then you really want to just keep your stop loss really, really tight. Video Corp, absolute mess, chopping around, waiting for a move. But when you zoom out, all the way out, you can see how I still think there's a bit of downside to come in this. And you can see how this is developing into a bit of a topping pattern. So just waiting to see how this clarifies itself. I think this is still, if you really just break it down, all we have is this impulse off the highs and a corrective structure in here. Absolute mess of a corrective structure. But I still have the feeling we're going to break to the downside. For any conviction to get long, like I said before, you'd have to look at this as an impulse on its own, which means you need this correction to play out at least a couple of months more. So you need to see this break down, probably come back up, break down again, and then we'll look for a long trade. But right now, I still think this is a topping pattern for downside. Pfizer, again, still possibilities that what we're looking at here is a running flat for more upside, in which case we need to wait for impulse correction and then trade that to the upside. Or we're trading this to the downside as a triangle, in which case that would be an impulse A, B, C, D, E, impulse up. That's a structure complete. We're now impulsing to the downside, in which case we want to see a long drawn out correction in here to trade to the downside. So nothing really in it, at least for a while. Ross Stores, another one, impulse correction, move to the downside. Bigger structure, you can see works with that. We're just waiting for the turn, nothing yet. Saves, another one, waiting for the turn to the downside. Structure still looks good. Kind of getting a little bit of a ascending triangle look to it at the moment, but not really. So again, just patiently waiting for a top a move down and a correction so we can start to short these things. Starbucks, another one that looked like it was ready to go, then reversed, went back up, hasn't broken the highs yet, fairly close, 107.75 highs there, and Friday's highs 107.54, so a couple of cents off, doesn't really make any difference, we're still waiting for a move, a correction, and a trade. Twitter, another one that just, the impulse to the downside looked like it was ready to go and then just impulse back up to the highs. Doesn't really make sense in terms of the price structure. But when you look at the higher degree structure, you can see how we have an impulse, very clean structure, impulse off that structure. So we have impulse, correction, impulse, and we're sitting right at that 1-to-1 level. So there's no conviction to get long in this area unless we have a decent corrective price action that says a decent upside is coming. But we don't have that. We have an impulse, an impulse, an impulse. So we have to just be patient, wait for something better on the cards, wait for something that says more upside is coming, or we've turned to the downside. Visa, another one. We were looking for this to correct and break to the downside, little flag trade that never triggered. No worries. Now, potentially an expanding flat is on the cards. So you can see if this is a potential to break to the downside. I think it does, but we'll have to be patient. There's no way to trade this just yet. We'd have to wait for the move, wait for a little flag, something tradable, and then take that trade from there. Otherwise, in short below these lows, I think is still good. You just have to have a decent wide stop. When you zoom out, you can see how the structure still looks good for downside. Nice impulse, corrective structure up, dying momentum on the MACD, big impulse off the highs, waiting for that correction, and it looks like maybe this is the correction. It's just in the form of an expanding triangle. But the downside trade is still there. Verizon, another one, broke through. That was a trade that we said was worth taking. Still chopping around, still looks like it's ready for more downside. It's not really getting any impulse to the upside. You want to be at break even. I still think that downside is on the cards for this. You can see how choppy it is. You might see this just develop into something corrective for downside. In terms of a trade, nothing yet. Unless you're in this already, there's nothing there for you until we see something that's worth entering. Exxon's another one. Looked like it was ready to go. We were waiting for correction, and we just started to see a strong impulse up to the highs. So at the moment, you have to look at this as a bit of a zigzag. Maybe we start to see a little bit of a double top, something along those lines. But again, if you zoom out, you can see exactly where we're at. We're really, really close to the top of the structure. Too close in my eyes to be looking for long trades with any conviction. So if you want to look for longs, you need to see a nice big correction in here. And right now, it's not what I'm seeing. To trade this with any conviction, I'd need to see this to be an A, B, C, D, E, which means we're here until March, maybe even April. So again, patience, patience, patience. You're going to lose a lot of money if you're not patient. And Zoom, we got our little pop higher, which is amazing. Really clean corrective price action. Looks really good. And when you zoom out a little, you can see how clean this is. Nice impulse, A, B, C to the upside, or corrective structure, and now we're waiting for that to turn into the downside. When you zoom all the way in, look at the structure, we are sitting really close to that region where you start to look for a turn in market price, 786 to the 1-to-1 region. So once you start to see this start to fade, you really want to look for those short entries. I think this is another one that's topping out and has pretty nice downside to come. As you can see, pretty much a straight line since December, January, somewhere there, without any corrective structure. So the downside on this, at the very least, is just part of this corrective structure, which is this one, impulse, A, B, C, and you move to the downside is 182. So a very nice little potential move that is about 56% lower than where we are now. So very nice potential trade available to you there. And definitely probably top of my watch list this week would be Zoom video. It's looking really good in terms of the structure and follows my short thesis that I have at the moment and the potential risk off we're going to have in markets. So yeah, I really like this trade. It's cool, guys. That's it. As you can see, the short thesis remains, but we still need to be very, very patient, waiting for the right price action to look for trades. So for now, you really just have to sit on your hands and just be really, really patient. Cool, guys. Have a great week, and we'll chat again on Thursday.